Alright guys, welcome to my channel. I figured it was time to finally put a face to a name. So, here I am, the new 1%. And today what we're going to talk about is what happened to the US dollar and, why do we need blockchain? Alright, so I'm going to just kick it off. So, in 1944, there was something called the Bretton Woods Agreement. And basically, the Bretton Woods Agreement was an international agreement to establish global economic order after World War II. So it created a fixed system, but adjustable exchange rates with the US dollar as the key currency that was pegged to gold. So really it established the International Monetary Fund and the World Bank to promote international policy and monetary cooperation. So the goal was to foster global economic growth, preventing economic crises and instability. So basically, in a nutshell, in 1944, the governments came to agreement that the currencies would be backed by something and backed by a physical, tangible asset such as gold. It could have been silver, it could have been anything, but they chose gold. So fast forward to 1971, when President Nixon was in office, the Bretton Woods system collapsed, including that fixed exchange rate regime. Why? This was because the US's balance of payments was growing, resulting in pressure in the dollar. This in turn made President Nixon take the US off of the gold standard, and this finally made the US dollar debt. And that's still going on today. So what did that do? One, it increased inflation. So without the gold standard as an anchor, this tempted the governments to print too much money, leading to inflation and potential hyperinflation, which we're kind of going towards today, which we are going towards today. Second thing, it reduced the purchasing power of the dollar. So since then, the dollar's purchasing power has significantly declined, making it harder for your average everyday American to save and achieve financial goals like home ownership. This is why you have a lot of millennials and people in Gen Zers and things of that nature. They are unable to afford a home. Why? Because the prices are so freaking high. But it's not really that the prices are high. It's that the dollar has been devalued by so much that your purchasing power literally has been decreased. It's been devalued. All right? The third thing that done was it grew the wealth inequality. So this shift to a fiat currency system contributed to widening wealth inequality. So assets like stocks, real estate, those things have increased significantly while wage workers have stagnated, which is why I try to tell people, get into stocks, get into crypto, get into things that go up during times of crisis. Gold, silver, physical assets. The fourth thing that it did was it increased the government's debt. Without the constraints of the gold standard, governments found it easier to finance deficits and accumulate debt. All right? So what this did was it offered greater flexibility in monetary policy, and it addressed immediate concerns, but it messed up the generations to come. So although it helped a little bit, it didn't really help because it messed up you and I, or the generations to come. So fast forward to 2008 recession. I'm sure everybody, or if you're my age, You remember that, especially if you're older than me, you had to really live through that. I didn't really have to live through that as much. But with the 2008 financial crisis, this crisis was fueled by low interest rates and easy credit. So since the Federal Reserve was freed from the constraints of the gold standard, they were able to lower interest rates significantly after the dot-com burst in the early 2000s. So this low rate interest environment encouraged excessive risk-taking by financial institutions, including the creation of a risky mortgage-backed securities. All right, so once the housing bubble burst, many financial institutions were left holding worthless mortgages backed by securities, those same securities that were risky. And the Federal Reserve had to step up and provide liquidity, which is money, which is quantitative easing, what they like to call it, to prevent a complete collapse of the financial system. All right? So if Bretton Woods was still in play, if the gold standard was still in play, banks would typically have held larger reserves to back their deposits. This would have limited the amount of risky lending that occurred before the 2008 crisis, as banks would have been more cautious with their lending. So, all in all, in a nutshell, the shift from the gold standard allowed for more flexibility in monetary policy, but it also contributed to excessive risk-taking and belief that the central bank would always intervene during a crisis, which means they felt like they can take bigger risks because Brother Bear would always come in and save them, which is, it's crazy. All right, so keep that in mind. After 2008 and 2009, Bitcoin was created. All right, the financial crisis of 2008 led to a loss of faith in the banks, the governments, and institutions, as many institutions faced collapse and needed those bailouts. All right, so Bitcoin was created by a guy named Satoshi Nakamoto, which, some of you who are listening to this video may know, some of you may not know. So what he did was he aimed to create a system where transactions would be directly between individuals without intermediaries like bank. All right, so Bitcoin was envisioned as a peer-to-peer electronic cash system, enabling online transactions without needing the central bank's authority. And that's big. This also addressed the double spend problem. Okay, so Bitcoin's blockchain tech solved this, which previously hindered the development of a robust digital currency, a digital cash currency. So many of you may not know what the double spend problem is. So really, the double spend problems refers to the risk that a unit of digital currency spent more than once that it would it would ensure that the traceability was needed to make sure that information cannot be easily duplicated. All right, so I'll give you an example. So let's say that Alice had 1 Bitcoin, right? She could attempt to send that same coin to Bob and Charlie simultaneously without a mechanism to ensure that the uniqueness of the transactions. Both Bob and Charlie might think that they received the Bitcoin, but only one of those transactions can be valid. Only one can be valid. So, back to Bitcoin though. Bitcoin really was a response to the perceived overreach of governments and central banks in managing the money supply and bailing out the failed institutions. And some say that the NSA or the government created Bitcoin because they knew that the unlimited amount of money printing was a path that was unsustainable. And that's what you hear Jerome Powell say. He always says that America's on a path, a fiscal path that's unattainable. And that's not, that's not sustainable. And that's very much true. All right, so keep that in mind. Now, we fast forward to 2012. In 2012, there's a lady named Rosie Rios. She is the 43rd treasurer of the United States. Her name is actually on a lot of your dollar bills. A lot of the money that actually. So I forget the lady who is the treasurer now, but before her was Rosie Rios, and her name is on all of that money. So if you look at your money, your dollar bills, and this and that, you will see Rosie Rios on a lot of that money. All right, so Rosie Rios led the 43rd treasurer from 2009 to 2016. So she was told by her administration, which was the Obama administration, to reduce coin and cash usage. But at that time, this was not possible because there needed to be a shock to the system to change consumer behavior. So, with tech advancing, there was going to be a natural progression away from the reliance on the physical currency, including cash and coins. She was put in place to help usher in the new currency and to make sure the future of money was equitable. After her term was over in 2016, a few years later after that, she joined the board of Ripple to help usher in that new form of currency. See where this is headed? Fast forward to 2020. What did we have? The pandemic. What did that do? It shocked the system. So the pandemic was the shock to the system that was needed to reduce coin and cash usage. This accelerated a shift towards digital payments. All right. So lockdowns in the U.S. Mint slowed down the coin production to protect its employees. This increased digital payments and changed consumer behavior, like Rosie Rios had previously stated. So that's big. So after the pandemic, the United States government, through the Federal Reserve, significantly increased the money supply as a response to the economic disruption that was caused by the pandemic. All right? So one, they wanted to counteract the economic downturn. Two, they wanted to prevent a financial crisis. Three, the Fed made large purchases to support large businesses and households. All right. And four, this increased the money supply, also known as, like I said before, quantitative easing. Once again, why? It's to encourage borrowing by keeping interest rates low. This was to boost the economy and also to promote spending on consumer goods. So basically, when the government wants to print a lot of money, they know that most people are going to spend that on what? Consumer items, material items, things that don't really make them money, but make that machine money. You see where I'm getting at? So the act of doing all this created more inflation and put our country more and more in debt. Now, we fast forward to 2025. We're at the point of no return. So, all of that frivolous money printing after we were taken off the gold reserve resulted in today where we are $37 trillion in debt. Okay, so the only way is to grow our way out of this economy by utilizing Bitcoin and other deflationary crypto assets to shrink the national debt. And we're going from an inflationary dollar to a deflationary digital currency. We can print an unlimited amount of dollars, but we can't print any more Bitcoin. It's like gold. It's scarce. And there will only ever be 21 million Bitcoin, just like there will only ever be however much gold that there is. So this means that, yes, the US dollar loses its purchasing power every year, and Bitcoin gains purchasing power. And it goes up because it's deflationary in nature. All right, so this is exactly why we need blockchain. Blockchain, such as Bitcoin and other cryptocurrencies, take the pressure off of the US dollar and allows the US to shrink its national debt, while also updating the payment system and how money works and flows through the system today. So now, finally, we can get back on track and encourage an economic boom and financial prosperity globally. Okay? And my last point is, why is it important to own these assets? So it's important to own these assets because now we have a chance to own a piece of the tech that will power the new financial system. Not only that, but it also encourages portfolio growth against a devaluing US dollar. And while the purchasing power of the US dollar declines, these digital currencies will go up in price and continue to go up in price because they have a fixed supply, unlike the US dollar, which you can print an unlimited amount of. Making this the perfect opportunity to become a part of the new 1%. I'll talk to y'all later.